What's up, travel lovers? Welcome back to my channel. In today's video, I'm going to be talking about the importance of setting up a dedicated bank account for your travel savings and what to consider when finding one that is right for you. You ready? Let's get started. I'm Amy, a traveling broad. If this is your first time here and you are excited to make travel part of your life, make sure you subscribe to my channel and hit that bell so you get notified every time I post a new video. One way to make travel part of your life is to open a dedicated savings account. The reason you don't want to mix your savings for travel with your money that you use to pay everyday expenses is if you open a separate account, it's kind of out of sight, out of mind. So it's just going to be able to build without you really thinking about it. And the other reason is a lot of times things come up that we need money for, and say you need a new tire or an appliance breaks down, et cetera, and you need to replace it. You don't want to take money out of an account that you set aside for this special purpose. So opening a separate account is critical for you making this dream a reality. Not all banks or bank accounts are created equal. So we're going to go over some of the things that you need to consider when you're choosing the right account for your travel savings. And when I say travel savings, I'm not necessarily saying savings account. It's a bank account that you're using to save money for your future travels. Okay, now with that out of the way, let's talk about a couple things. There are mainly two options for saving money. There are traditional banks and there are credit unions. Let's talk about the characteristics of each of those. Traditional banks, typically there's a lot of branches that you can choose from. So usually quicker to roll out new technology such as mobile apps. Credit unions, on the other hand, charge a lower fee, may offer higher rates, and they place more of an emphasis on customer service. Credit unions often require certain memberships, so make sure you look into that before you decide to open an account there, and make sure you qualify to do so. Now you're probably wondering, what type of bank account should you open? Should you open savings or should you open checking? Let's talk about the characteristics of both and which one may be better for you. So first off, let's talk about checking. There are several pros to opening a checking account. Checking accounts are meant for everyday use and they give you easy access to your money. There are no limits to the number of withdrawals or transfers you can make each statement period, and they offer a variety of ways to make payments. And as long as the bank is insured, your deposits are insured up to $250,000. A few cons of checking accounts: they usually pay low or no interest. Some require you to maintain a specific minimum balance or you are charged a service fee. And if you overdraw your account, you'll be charged a fee for insufficient funds. Now, savings accounts have pros and cons as well. Some of the pros are that they are better for stashing cash, and your money is pretty liquid. You can make up to 6 transfers or withdrawals per statement cycle. Savings accounts also earn interest, which is free money to you. And most come with ATM access. And just like with checking, if your financial institution is insured, your deposits are insured up to the $250,000 limit. Now, some of the cons of savings accounts are you have limited access to your money. I know that this was also a pro, the 6 transfers or withdrawals allowed per statement cycle, but 6 really isn't a lot. Another con is interest rates on savings accounts may be lower than you could get on a money market account or a certificate of deposit. One last consideration is where you open your account. Should you open it at a traditional brick and mortar, or should you open your account at an online bank? Traditional banks offer convenience and a more personal experience, and these banks may offer access to a wider ATM network. Cons of traditional brick and mortar banks are that the fees and the interest rates may not be as competitive as an online bank. Now, online banks have pros and cons as well. The pros are that they are open 24 hours a day, 7 days a week, 365 days a year. They typically offer more competitive interest rates and charge lower fees because they don't have the overhead. And your money is available to you wherever you have an internet connection. So you can go online any time of day or night and do a transaction. And one of the cons is sometimes transactions may take a little bit longer at an online bank. When you're opening your bank account, here are the things that you want to consider. You want to make sure that the bank or credit union you choose is insured. There are low or no fees, no minimum balance requirement. free access to ATMs, and mobile and online access. The whole point of this travel savings is to accrue money, not to pay fees. So that's something you really need to look for. Two of my favorite online resources are Bankrate.com and NerdWallet.com. Both of them have very comprehensive information. They have financial calculators. They give lists of the best accounts for each month. They're updated regularly, so the information is very current. So below this video, I'm going to put some links to pages on both of those sites that I think will help you as you do your research. Now, I know that we went over a lot of information and your head may be spinning. So I put together a quick resource that you can download below. It'll give you something to refer to try to find the bank account that's right for you. The hardest thing to do is take the first step. Now, don't delay doing this. Get that bank account open, even if it's just with $5 or $25. Whatever, just get started. Once you do, I promise you, you'll be so glad that you did. If you haven't already done so, be sure to hit the subscribe button and click the bell so you get notified every time that a video goes up. Thanks for watching. I'll see you in the next video. Bye.